Hi, this is Akmir with the Bulletin Board Heroes for Tuesday, the 14th of March, also the birthday of a true hero, Sir Michael Cann, who's 90 today, so congratulations to him. No, not too many congratulations for the FTSE, which has obviously had a week from hell so far. We've had support coming in, I suppose, with near the old resistance, 7600, that was August resistance, also resistance in back at the beginning of December. Looking for an end of day close really above 7600 to give us a trigger on the upside. The other point to note is that the RSI now for the FTSE is down at 25 and historically dips towards the sub 30 area, have been buying opportunities. If you look back, you can see July 2021, back in September 2021, etc., all those other times that we've had RSIs down below 30. The last time, I suppose, was back in the end of September, and then we had bullish divergence going into October, which then gave us near 1,000, actually more than 1,000 points, the 1,200 points rally after that. So let's see if all the doom and gloom will actually settle at this level, and we can then head higher. There is a possibility, I suppose, also of an uptrend line that one can draw from back in November, so going through the old December support and then actually getting almost exactly on today's low at 75.03. So that could be the low. Might have already seen the low, especially if you believe in the RSI, meaning that we're only a day or two away from the actual low. Risk is, I suppose, if we break 7,500, we get down to the 200-day moving average at 74.20 or so. But given where we are on the RSI scale, would it be surprised if we went much lower than that? The 200-day line saved the market back in December. In terms of the upside, if we get any end-of-day close above 7,600, then we could be heading back towards 77.20, which was rather support on the way up back in January. So above 7,600, looking for 77.20 if we get it. Otherwise, 7,400 or 74.20, the low that we see at the moment. On to the DAX, which was slow to follow the FTSE down earlier in the week, which is, I suppose, a good thing. In terms of what it's done, we actually found support really at the 14,900 area, which was the old January support. We bounced from there, won an end of day close back about 15,200 to then get us back up to 15,500 to fill that gap down that we had last week. The scary thing about that gap was that it was the island reversal there, which then led to the gap down, was that was a bull trap island top, which tends to be quite a scary negative configuration in charting. But for the time being, 14,900 looks like the low. If we go below that, then maybe down towards 14,500 and the old November-December resistance. But at the moment, looks like we might get away with 14,900 on the DAX rather. On to the Dow, which is, we can actually say it's all the Dow's fault, the recent problems we've had. Here we managed to retest again that early November support area around 31,700. So looking for that area to hold, and then maybe a rally back towards the 200-day moving average at 32,400. In terms of where we are on the RSI scale, pretty oversold there, and as you can see, if you look back, RSI 30 tends to be a buy point in the market. We've had multiple examples of that over the recent past, so it should be near the end of the current negative wave. On to the situation of Bitcoin, which tried to mirror the price action at the indices, but now actually look at this, amazing. We feared we'd get a test of the 200-day moving average, 19,700. That was almost exactly the low at the end of last week. Bounced off RSI 30 as well, and all we're looking now for is basically end-of-day close at current levels or above to get us that long-promised move to the top of the June broadening triangle, now heading as high as 31,500. So those who thought that the game may be up may be disappointed as far as the price action we've seen. There's also the case that we've got an uptrend line that you can draw from November there, and that has also helped this market. But the 200-day line came in perfectly to save this market, and I'm sure one or two people will be caught out. If you are a bull of Bitcoin, then above the 50-day moving average at 22,900, you would be targeting up to 31,500 as long as we close above the 25,000 zone. So a good win there for Bitcoin, and I'm sure a lot of people caught out by that bear trap that we had down at the 200-day line. On to the small caps, and starting off with Ajax Resources, which had a great run from November to February. We're looking for that to be resumed pretty soon now. We've got a rising trend channel there from back in June, right on the floor of that channel now, around 9.25, 9.5 pence. There could be a wobble down towards maybe 8.5 or even 8.25, which was the November support on the way up, but otherwise still in that channel, which is heading up to 18 pence. That could be seen as soon as the end of next month if we get on track here. If you're cautious, you wait for an end of day close through 10.75, which is the rising 50-day moving average, and then take some action, but still in that channel there. And remember, the rally here started with a golden cross back in November, so it's got a good pedigree in terms of the rally on this stock. Stock which came up with chunky copper grades this morning was Aterian, and here we already had a rising trend channel target from December as high as 1.1 pence. Still sticking to that while we hold above the 0.9 pence area. Maybe a bit of jiggery pokery because we gapped up today, and also we're all right on the 200-day moving average level at 0.99. If you're cautious, you wait for an end of day close above the 200-day line, and then assume that 1.1 pence could be on its way after that. If you are an optimist, then you'd be suggesting or thinking that the next level up after 1.1 would be as high as 1.3 on a broadened rising trend channel derived from that October peak that we had in the autumn. This stage, only back below the 50-day moving average at 0.84 really turns things negative in any way. On to Belluscura, which has been rather negative of late. But the good news today is that it looks as though we've got the beginnings of a bear trap. So the low back in January was around the 38 pence level. We just fell slightly below that yesterday, about half a pence, and we've rallied strongly now, up to 41 pence today. So it looks like a bear trap backed by a bullish divergence line there. So lower low for March, but a higher RSI trace. Just want to see the shares break that resistance line there from back in January at 43 pence. Above that, we're looking to retest the January resistance up to 51 pence, maybe over the next 2 to 4 weeks. But just as I said, the first glimmers that Belluscura is turning round. On to Blue Star, which I believe had an announcement today. We've been looking for the shares to make progress over the recent past. Initial target here up to 0.32, which would just beat the old February resistance, and then after that probably up to the 0.4 area at a resistance line derived from that old June peak. So while we're above 0.25 initial March resistance, looking for 0.4 perhaps as soon as the end of next month, and a very solid move there with a rising 50-day moving average. And also if we close above 0.22, which is highly likely, it will be a gap close buy signal, which is a decent technical or decent charting indicator in the charting book, so to speak. So rising trend channel there from July, 0.4 on the cards by the end of next month, and maybe the way things are going, by the end of this month. One of the surprise rises last week was Celadon, and we were suggesting that above the old floor there from last spring, around 85 pence, we could go up to the next level up, which is £1.60, and the January 2022 resistance. In fact, that's up there at 166 pence, and that could be hit over the next couple of weeks, especially while we hold above the resistance on the way down at £1.34, so above 134, looking for as high as 166 on Celadon. Eqtec is next, and here recovery in the air. We've got a situation where shares are making some progress within this falling wedge. We need to see an end of day close through 0.3 pence to then give us the chance of heading up to 0.4 in the 200-day moving average by the end of next month. Recovery scenario in place while we hold above the 50-day moving average at 0.27. Nice bounce for the RSI around the RSI 50 level. It's almost like a double bounce there. So that does suggest that even though we've come back off today's highs, we could still make some progress towards 0.4 while we're above that 50-day moving average. GCAT quite intriguing at the moment. Obviously, a bit of a falling knife situation, but shares seem to have made some progress here, finding stability in the low 0.2s. Still waiting for an end-of-day close through recent resistance at 0.8 to give us a move up to 0.4. And if you're cautious, you wait for an end-of-day close above 0.8. And presumably, or actually advisedly above RSI 50 there versus the low 40s that we have at the moment. Microsaic was a potential turnaround situation described a little while back, and looks like we've done that in spades. We were expecting the shares to break that line of resistance there from back in August and follow through, and they certainly have done it in a day today. An end-of-day close above the 200-day moving average at 0.56. It could be enough to get the shares up to as high as 0.08, which was the previously called target if everything went well, and so far it looks like everything is going well on that situation, especially while we're above 0.05 and that old February resistance for the shares. Stock which is being able to spread the message quite well in recent days and recent weeks has been Oxford Cannabinoid, and here we've broken that neckline resistance there at 1.37 pence. That's encouraging and suggests that we should head up to the previously called higher target at 1.8 pence, maybe over the next 2 to 4 weeks. And it looks as though the shares are just getting started, which is even more interesting actually. So we could get back to the dizzy heights of maybe 3 pence over the next couple of months, all being well. But a nice turnaround there, sort of oil tanker type of turnaround, and starting to gather momentum, especially after that hammer candle that we had on Friday. Pretty impressive stuff there. But ideally a decent end-of-day close above, or end-of-day closes above the old January peak to take us up to 1.8 on Oxford Cannabinoid. On to Pineapple Power, which is regrouping after retracing from the sharp rally that we had in November. Here we've bounced a bear trap rebound off the or from below the 50-day moving average at 3.25 pence. Above that, we're looking for 5 or 6 pence again, maybe by the end of next month. Nice risk-reward trade there, and I think if you look closely, you can see that the low that we had yesterday was basically old resistance on the way down. So above 3 pence, looking reasonable there for Pineapple Power. On to Rockfire, which has made very good progress over recent months. You can see that the shares gradually recovered their 50-day moving average and gapped up, unfilled gap to the upside back in January, one of our favourite setups. In fact, there was another one in February, so pretty good stuff there. We had a target one of the initial targets there, 0.22. Above that, we're looking for as high as 0.3 pence by the end of next month, and that would take the shares to fill the gap there from back in October. So above the 0.22 area, looking for 0.3 on Rockfire, especially in the wake of today's news from Australia. Just a couple left now. First is Quantum Exponential, and here we had the break above the 200-day moving average there at around the 2.18 pence level. Above that, still looking for a target as high as 4 pence. If you're cautious, you wait for an end-of-day close through recent resistance at 2.6 pence before assuming that the shares were going to head higher. Finishing off with Upland, and here shares trying to do what we want them to do, in the sense that we want an end-of-day close above the 50-day moving average. They've gapped higher today, which is a very good sign. And while we're above the floor of the channel there, around the 0.58 pence level, looking for as high as a penny by the end of next month, maybe going into May. Maybe it might be a bit ambitious, but end-of-day closes above the 50-day line at 0.66 are really the key for Upland to head higher. We've also got the RSI holding around or just above the neutral 50 level, which should also help the situation. That's it from me today. More updates tomorrow.